Wow. Good morning, everyone. I am not alone today. I am joined by the famous Bitcoin Jaime.
Or infamous, either one.
Hola, buenos
Buenos
dias.
dias. How are you guys?
Me gusta estar en la pipas.
That's just wrong, bro.
I'm learning Spanish terribly, by the way. I'm trying, but it's like really bad, and so I say some stupid stuff sometimes.
But like it is in Latin America, the fact that you try, they love you for it. So we're
Yeah.
good, my man.
Yeah. So I hope everyone had a wonderful weekend. I certainly got some sunshine. Hope you did too. If you're not, go touch the grass. Go outside, touch the grass. It's okay.
It's
Uh,
about time.
yeah, it's really okay. I know the bear market's been a little brutal, but you can go outside. It's actually probably the better place for you to be sometimes. So if everyone would just say something in the chat, just say what's up, good morning. Just really trying to make sure we're all fostering community and all saying what's up to each other. So why do I say I want a bagel sandwich just now? I didn't, but now I just did. Plot twist. Good job. You made me say that because you said
He
that.
set you up, man. Code bug's good. He must be a white hat.
Yeah. So markets today. Let's take a little looky-loo. I'm going to look at the bigger markets. Jaime, if you would go over Bitcoin specifically, I think that'd be great. So we have, overall markets happening right now. Everyone's kind of red, and that's okay. It really is okay. You got to shake out the fluff and make sure what you have left is really the hodlers. Like so, we have -1% on Bitcoin, -3% Ethereum, Binance, BNB. We have a big story about that. We'll cover why BNB coin got kicked in the testes, but
The
they really
tenders.
did. They got kicked in the hubby tenders. No bueno. So XRP, same thing. Regulatory clarity is still not there. Cardano, same thing. Regulatory clarity's just not there yet. And then we have meme coins are typically on their way down anyways, and Polygon is kind of feeling just what the rest of the proof of stakers are doing right now. So that's what you can expect. Like, hey, how come everything's red right now? Well, it's don't get freaked out. It's not a huge deal. If we look at the total global market cap, this kind of tells the story of what's happening. So this is the 24-hour. You can see uh, people pulled out some significant money in this space just due just due to selling the news, right? We had some news items that we're definitely covering today. People kind of spooked. And we're like, yeah, other people are probably going to spaz on this news, so we'll sell, wait till they sell, and then we'll buy back in. So just in case anyone's wondering what's happening on that kind of time frame, look at the 90-day though. We're still generally trending up. So cryptocurrency, you'll tend to make a lot more money if you look at the longer time frames. You'll tend to get steamrolled if you're looking at the dailies on rather exclusively the dailies. You'll get scared. You get scared. So Jaime, if you would show
Let's
the
do
good
this.
people what's going on with Bitcoin.
All right. I have,
Quapa.
let's flip over. Beautiful. So I always start on the macro. Where are we in the entire thing? It's easier to digest what's going on. And as we've been discussing ever since the beginning, show me the charts, I'll tell you the news is kind of the way this works. So we've been expecting a pullback, and I'll zoom in later. But where are we in general? Bitcoin is still on track. This is the median for the price action, and this is the growth S curve for Bitcoin since its inception. We are on track, guys. So don't panic, don't yell. Just know that we're within the range of the bottom. The closer we get to the yellow again, it could be a double bottom. We don't know yet. This is not known. All we deal with is probabilities, and it's up to
Yep.
you to make your entries or exits at the proper times. So if there's a pullback now, hopefully you've locked in some profits so you can then, if you're a day trader or a high frequency trader, you've locked in some and wait now for this pullback. On the macro aspect of it, you can see that we are here we go, boom. We're in this range. Every pullback now should be a buying opportunity. I still have my buys way down here in this area, but we'll look at that in a later moment. Let's move on to the monthly. So on the monthly, you can clearly see that we hit the 50 moving average on the monthly, and we had never dropped below since Bitcoin began trading. You can always see it came back to support on the previous bear market. This is the COVID break. It wicked to the bottom, but closed way above the 50 moving average. This is the first time ever that we have a full close where it dropped. These 6 months were telling. It dropped down. We wicked to back up to it. And now Bitcoin is doing the confirmation that we are going to stay below the 50 moving average for the near future. Although this is a very good candle, a very strong candle, now we're looking for the formation of the bottom. Where will we start buying? So at this moment, we're very close to the Luna 3 arrows capital collapse. And the next stop would be where we had the drop of FTX, and we're coming close to it. So overall, we are going to stay below the 50 moving average. It seems like this will not close until the end of February. So let's zoom in now a little closer. Where are the next steps? So now I zoomed closer into the weekly. Remember the last couple of weeks, we had been mentioning the first death cross in Bitcoin's history on the weekly is actually occurred last week. We are now officially where this red moving average is the 200 weekly moving average, and the green one is the 50 weekly moving average. What that means is the 50 just crossed under the 200. You'll see this moving average, a lot of people watch it on every time frame to kind of see where the trends are. Does that mean we're going to continue much further? Not necessarily. Usually it's a sign, it usually transpires very close to the bottoms. The question is, how far down will we go? At this moment, we're hovering. Here it's much clearer to see. This line right here, let me zoom in even closer, is where FTX collapsed. We're now coming down to see if we test it as support. The big question is, will it tap here and reattempt the cross above the 50 moving average, or will it tap it and continue on down to the next level, which stands around a very important level is the 19,500, which I have marked here. It's a monthly level. Hopefully it stops there, but every time we break one of these green lines, that's where I'm entering. Either we tap as support, and then I put the stops right above it. If this continues, I'm sorry, just below it. So if it breaks through, it gets me out. And then I look at the next level. So this is what we're looking at currently. And like we mentioned before, I look at these for where the news will transpire. Well, this current drop just now, we'll speak of it in a moment, but it could be the next shoe to drop, which would bring us below this FTX collapse candle, this level here. But that remains to be seen. For now, just know we are near. I have buys all the way from 9,200 up, broken down into 6 levels. So I'm in a theory until the probabilities are we're near the bottom. There should be a nice scare to flush out all the weak hands. A lot of these cryptos, we've mentioned it was time period is kind of like the .com era, where we need to see a lot of this flushing of a lot of these scam coins or coins that have no purpose. Just like in the era before, we had the .coms. A lot of them just added .com, but it could be bullshit.com, and it was sky high. It's kind of what we're seeing with AI currently in the traditional markets, where anything with AI is just pumping. Well, now's the time for a crypto cleansing era. And the big question is, how far do we go? For you builders and the ones that are building in the space, this is the time to build. This is the time to invest, because while everyone runs for the hills, if you know what you're doing and you know there's a purpose and a reason for the project you're working on, you will be set for when the market bottoms. So that's what I have now so far, Brandon, in the crypto market overall. Just build and huddle on.
Yeah, that's what I'm seeing too. Appreciate the detail on that. Hope that was useful for everyone. If it wasn't useful, flame Jaime in the chat. So
Yes, and I'll answer any questions.
Yeah, what's up? If you're watching the stream, go ahead and say what's up. Good morning in the chat. We want to make sure everyone's just connecting together. The show's not even a Brandon and Jaime show. This is a community show. So where we drink crypto and talk about coffee. That's not it. That's a joke. So calm down. So first story of the day. Shall we do that? Are we gonna do that?
Please.
I feel like doing that. Let's go get spicy.
They're thick stories this week.
Yeah, a little situation. So first story of the day. Visa. Kind of interesting. Of all them companies, Visa. So stop whining. So crypto payment firm Wirex and Visa expand partnership to 40 countries. So the partnership footprint will now expand to the UK and APAC. So let's read the news. Cryptocurrency payment app Wirex has signed a long-term global partnership with Visa to expand its footprint in Asia Pacific and the UK, according to an announcement on Monday. The announcement builds on the two companies' existing relationship of a crypto-linked Visa debit card in the US and Wirex holding principal membership status with Visa in Europe. In 2015, according to Wirex, it became the first company in the world to develop a crypto-enabled card that allowed users to buy and sell multiple traditional and cryptocurrencies. With this expansion with London-based Wirex, which has over 5 million customers, will now be able to directly issue crypto-enabled debit and prepaid cards to over 40 countries. While its largest customer base in the UK, Wirex has previously withdrawn the UK Financial Conduct Authority's temporary registration regime ahead of the deadline to obtain a full registration, which meant it would serve UK-based customers via subsidiary license in Croatia. Visa wants to bring more payment options to consumers by connecting digital currencies with our network of banks and merchants, said Matt Wood, head of digital partnerships. So, interesting. A few things here. One, this is good for adoption of general market sentiment. Okay, this is not good for adoption of people holding their keys. Okay, what this basically, how I'm interpreting what they're saying, they're building middleware, so they have a centralized repository. They say, hey, yeah, you can send us your legitimate crypto. We'll hold that. It's ours now, and we'll give you some funny money, and we'll let you use our credit cards with that funny money balance. But that being said, that is utility. Truly, people still use Visa. They still use MasterCard. They're still using normal credit card payments when you go to Kroger or Publix or whatever your grocery store is. You're still using a credit card typically. Like right now, you're not busting out your Ledger Nano and paying with that. I don't think we're too far off from that being the case, but probably another 5-10 years, we'll see payment solutions become more normalized, more like people pay for like Venmo and whatnot when they're garage sailing, that kind of thing. But it is actually a big deal that Visa, of all these companies, is getting interested in at least playing nice with the ecosystem.
Correct. And it's the usual. Remember, Bitcoin was engineered to be a peer-to-peer financial transfer, store of value transfer system. So the fact that now you have what banks must do to make a buck, guys. So help them out. They want to get in the middle between you and your store of value and charge you fees and do whatever they need to do to earn some money. So it's not much, but everyone's got to make a living. It's up to you to allow them to earn from you, or you self-custody your own store of value. So you make the choice. It's your call, guys.
And it's possible that, people like us can pressure them to at least create an avenue where people can actually just tie a specific wallet. Even if we don't necessarily hold the keys, we still know that we can send and pull it back, just like a centralized exchange kind of thing. So at very least, that would be nice, just to be able to put some small pockets of money to be able to pay mortgages, that kind of stuff. But
Yep.
anyways, back to the news. So interesting. Bitcoin saved me from a Russian missile strike. So this is just kind of an interesting story. So for me, being a Bitcoiner means believing in a free market, voluntary exchange. Amen. I'll zoom in. This is like not zoomed in at all. My bad, fam. My bad. Too zoomed in. All right.
But good.
I live in Ukraine city of, I can't pronounce that, Kramatorsk. That's what I'm going to call it.
Sounds
The
good.
administrative center in the eastern part of the country until Russian invasion of Ukraine began. As a Bitcoiner and remote worker, I decided to relocate to the western part of the country. Fortunately, Bitcoin provides the personal freedom needed to do something like this. While Gigi correctly stated that Bitcoin is time, Bitcoin is also space and freedom of movement. So last year, I joined the Bitcoin Magazine Ukraine team. However, my work was interrupted by a brutal attack from the Russian military on February 1st. When it struck my apartment building, in the attack, the Russians used a mobile ballistic missile system known as Islander K. According to Russia's defense ministry, its forces use the Islander to target military infrastructure. But the reality of the attack was as follows. So, using this precision weaponry, Russian forces struck a residential building, and it took out. How do I read it? Language, and it turned out to be one of the ones where I had been living before I moved. The outcome of using hypersonic ballistic missiles against the apartment building was predictable: complete destruction. So the attack killed four and seriously wounded 18 people. A higher death toll was prevented by evacuation of most residents and professionalism of rescuers who saved many people, including a 2-year-old girl. And so this is the most tragic event. Bitcoin versus the real estate as a store of value. So this is the interesting part here. So this case clearly shows that Bitcoin serves much more effectively as a store of value than real estate. You hearing that? Your real estate can legitimately be attacked by some other nation. It can be attacked by termites. It can be attacked by fires. It can be attacked by financial crisis. Like that's not to say that real estate's not a good investment. It is to say that Bitcoin is hardened against those types of attacks, right? If you have your Bitcoin stored in a hardware wallet, actually in a fire safe, and you have access to it to be able to grab it and go if there's a crisis, you are in a uniquely more mobile position than real estate might be. So, first, Bitcoin cannot be destroyed even by the most severe missile attacks. Well, you can certainly lose your private keys. I'll say that. And that's why you want to, make sure your operational security is tight. Hashtag dirty shovel gang. As long as you properly store your seed phrase, you can always restore access to your coins. Physical property is much more vulnerable, and physical destruction means you do not have access to it anymore. Second, Bitcoin's a global monetary system and does not significantly depend on local conditions. That's key, right? In different countries or regions of the world. In contrast, real estate makes its owners dependent upon the conditions of that country. In case of war, for instance, both the liquidity and monetary value of real estate can fall dramatically. And so, Jaime has a much tighter perspective on this because he's been someone who lived in different parts of Latin America, and he's like, can you speak a little bit to that unrest that you've seen and how Bitcoin solves some of those problems?
Yes, and we've brought this up in the past also. So, and this is coincidental. Like real estate is usually a good store of value. It has been historically. That's why it's called real estate. So it's an estate that is a real asset where there's value into it. But the country's stability depends on that, how real it is. So in the case of Ukraine, or in the case of Latin America, if it was ever ravaged by war, or when it's ravaged by war, you really cannot take your real estate with you. And now the big question is, okay, if it's another entity that takes over, let's say Russia, now how do you think they're going to treat the Ukrainians versus the Russians in that environment? Even though you owned the property yourself before the war, you may not own it afterwards. So in the case of this author, it allowed him to uh, remove real estate, convert it literally into a something that is transportable. And there's so many stories that came out of Ukraine during that war where they were able to leave as refugees, but with their store of value. So wherever they arrived into, they were able to reconvert it back and maybe buy more real estate or retain it as, or, do whatever you need to do as you see fit in your financials. Bitcoin gives you that transportability and that freedom. And as long as you know those key phrases, they could even take the stole courage from you. As long as they don't get your keys, and it won't matter. You can still reconstitute the access to your wallet on the blockchain. So that's the advantage of Bitcoin as a engineered store of value by other humans, is that you can rely on it to be there when you need it. In the case of Latin America, it hasn't been ravaged by war lately, but yes, by inflation and economic meltdowns. And Bitcoin, even though us in our worlds, Bitcoin has taken a big dump. Well, if you look at the Argentine peso, or you look at other Venezuelan coin, all the others have lost way more than Bitcoin. So you have a lot of people who still use it in Latin America because it has descended less. They know there is a upward trend for Bitcoin in the end because it's a global adoption. It's decentralized. So you have not a government or governments controlling it. It's the entire global community that are supporting this type of store of value. So that's the advantage of Bitcoin, is that transportability. When there was that blockade in Canada, people were even trying to get gold to the guys that were the transport groups. No, Bitcoin was the only one that really got through and made a difference to support
Yep.
the truckers community during that meltdown. So that transportability and that peer to peer, because anything else can be taken by the banks or frozen at the banks, peer to peer, there just isn't a way to block it. And that's the importance and the revolution of Bitcoin in the global markets in this case.
Yeah.
So, yeah.
And the other thing too is, like, in Canada, they had to use multi-sig wallets to make sure that, one person couldn't just jack it. You had to have two people sign the transaction in order for the transaction to go through. So we what's cool is we just have real world use cases for there being crises in the world, and this actually being a solution. So I think that that's bullish in the long term, because, like, if things do get rough, people can knock the family budget down to rice and beans, survive a little bit, and be able to keep their nest egg where it needs to be. And then Bitcoin has these halvings every 4 years, which really creates these trigger moments where
Mhm.
globally people do put their money back into it because they know that it's going to get more and more scarce for that introduction of supply. And so we have these mechanisms kind of built in that makes it
Mhm.
so that there's a light at the end of the tunnel. Even if we're going through some difficult times, we can kind of link arms together, make sure we're taking care of one another, and then in a short period of time, 3 years or so, we're able to exit into at least a profit taking moment. So that's
Precisely. And
really important stuff. Like this is actually a big deal. This is like survival of the fittest kind of stuff. So
yeah, and into crypto touched a good point. Countries have judged El Salvador during this bear market, but when Bitcoin is hitting the new all-time highs, guys, it would be
yeah,
a brilliant move by this guy.
you're.
Even though there's a flush out coming, I'm telling
Mhm.
you, it's a great global experiment. The moment uh, El Salvador is validated, trust me, the people at the World Economic Forum, the central banks globally, they they do not like this, and it's because, of course, we're taking the store value out of their uh, war chests and keeping it individually, decentralized in the end. So it's going to be very interesting, guys. And it is the hardest asset in the universe at this very moment. Gold still has more coming in with unknown available. In the case of Bitcoin, even though it's coming in, it's a deflating asset because we know it's 21 million grand total. Stop. That's it. So if you know this is the hardest asset, the only thing is the buy pressure coming in for it to continue rising in value when people realize, okay, it's transportable. It has all these qualities that I could cross a country from one country to another naked and still not lose my store of value, which in gold, they'll pull it out of your anus if you shoved it up in there and they'll find it. But a actual wallet, a key phrase, only you can give that up. So it's a revolution in itself.
Yeah, we're not advocating suppository Bitcoin wallets, by the way. So
No.
no. Although I think Ledger sells them. They market them differently. They market them as like fireproof tubes, but it's like, that can go in your butt. that can go in your butt. So our thank you for the insight, Jaime. That's serious and sobering. So our next story, the SEC's targeting of Kraken, the exchange, staking program sends shockwaves through the industry. So more regulatory back and forth. This drama is actually kind of entertaining. It's like watching a Latin soap opera, you know? And I've been drinking, so I'm having a good time. So the Securities and Exchange Commission moved to charge crypto exchange Kraken with failing to register the offer and sale of its crypto asset staking as a service program. Signals an aggressive new posture by the market regulator. I can't English today. What's up with this, Jaime? Too much Spanish.
And I've
for me.
seen you in Spanish. Holy cow, we're in trouble,
Yeah,
brother.
yeah. By the market's regulator over a key revenue stream for exchanges. Kraken settled with the agency on Thursday afternoon, ending its staking program in the U.S. and agreeing to pay $30 million in disgorgement. That's a terrible word. Oh, I'm disgorged.
There's a blue pill for that.
Yeah. Prejudgment interest and civil penalties. But the move likely signals more headaches for crypto companies in the U.S. Really? More headaches? As the SEC gives us headaches, looks to the further crackdown on passive investments offering after several high-profile failures have left customers in court seeking pennies on the dollar or satoshis on the Bitcoin. That's the first time I've actually seen that phrase, and I love it.
Yeah.
Instead of pennies on the dollar, satoshis on the Bitcoin.
The block
Brilliant.
is doing it right.
Shout outs. Love that. Staking as a service providers are generally not providing proper disclosure, and there is not a reliable way as an investor to know the answer to these important investment questions. SEC Chair Gary Gensler said in a video that accompanied the settlement announcement, if a platform goes under, investors end up in the line in bankruptcy court. Gensler said, pointing to multiple bankruptcies over the past few months. That's why it's so important that these companies and platforms comply with the security laws. The problem is the security laws aren't clearly defined all the time. And that's why this whole space is freaking out. They're like, you keep sticking our feet to flame. You aren't giving us clear regulation and regulatory clarity. And then you're conveniently picking and choosing which rules apply to us negatively just to shake us out. You can't do that. And so lots of big money, big investors are getting nice and salty, as they should, with the SEC, because they're playing out of both sides of their mouth. They're like, hey, we're not going to give you clarity. Hey, you broke the rules. And people are just getting pissed because of that, because it's making it so builders don't know how to move forward properly, right?
Right. And go ahead.
No, I yield to you. You have the floor.
I think you're about to do the industry blowback, and I think that's one of the key items of this whole thing. So, and it's so important because, okay, what is staking? So Bitcoin is proof of work.
Mm-hmm.
Staking is where you put your own value to secure the network and process transactions. So you deploy a server, you put tokens into it. Of course, the tokens are the same that you're securing, the network you're securing. So Polygon, Ethereum. So Ethereum just transitioned from proof of work to proof of stake. But it implies store of value. By the SEC's move to, and here's the key, guys, to retail investors, the
Right.
common investor, not the high net worth, not the qualified investors. It's the retails that are going to get slaughtered through this. Is they are saying you cannot stake. You're breaking a rule, even though they have not given regulatory clarity, like actual written clarity on it. Kraken, of course, is paying the fines and whatever it takes to stay in business. But the writing on the wall is, okay, if you were uh, buying Matic to stake it and you're a US citizen, you will not be allowed to stake it. So that's where the clarity must come. So now there's a big question in that problem is, well, what about delegated staking? What about other forms of staking
Yeah,
where
non-custodial.
non-custodial do not take possession of your asset to stake? Does that apply also? So there's a
It
lot of
doesn't.
gray area. Pardon?
It doesn't apply. And
There you go.
and that's where Pickle Rick needs to go. Pickle Rick, Mr. Greenbean needs to go to non-custodial staking. Because the whole idea of non-custodial staking is you always have control of your private keys. I never touch them. If I'm hosting a node and all you're doing is saying, I'm going to risk my profit in the period of time by basically opportunity costs, and I'm going to stake to this node, and this node doesn't pay me or something, then yeah, I took that risk, but my original amount that I was staking in the first place isn't at risk. I just can't move it around while it's staked, right? Once I do want to move it around, all I have to do is say I want to withdraw it. It'll have a cooldown period, 21 days or whatever the Bitcoin, or sorry, not Bitcoin, whatever the platform has as its rules, and then you'll have your funds liquid. You could spend them as you see fit. So I think that that's a model that most of these things aren't doing. Kraken's not doing that. Kraken is not doing that.
Right.
They're holding your private keys, and then they're saying if you lock your money in our platform, we'll pay you. And functionally, they're using it as a liquidity pool.
Yep.
That's my architectural understanding. It's like, and so that's where it's getting kind of sticky, is because people are not following the rules that the blockchain itself set forth. They're instead making middleware and middleware products, right? So
Yeah.
yeah,
And that's the key difference, is like you just mentioned, Brandon, is the fact that they're doing it for liquidity.
yep.
You are the asset. Your assets are what they need to have
I
the
want your
liquidity to trade.
assets.
Yes, precisely. Versus if it's in your wallet, it's your asset,
Yeah.
not theirs.
Yep.
So it's interesting that also Gensler did a video just last week regarding not your keys, not your crypto. So for a guy that's trying to crush the industry, now he's announced it. So it's almost like they're getting ready. And today is one of those results, or over the weekend, a proof of they're now cracking down on the crypto industry.
Right. Yeah, and Gensler, he sent us all an email. He's joining the Dirty Shovel gang, so pretty cool. That's a joke, but I think he is. Reader knows. So the settlement came a day after Coinbase CEO Brian Armstrong tweeted that he heard rumors that the SEC would like to get rid of crypto staking in the U.S. for retail customers. Coinbase has its own staking program. Coinbase's staking program was not affected by Thursday's news. Coinbase chief legal officer Paul Grewal said Kraken was offering a yield product. That's the key. Offering a yield product. Grewal said defending Coinbase's staking services as fundamentally different and not securities. For example, our customers' rewards depend on the rewards paid by the protocol, and commissions we disclose, Grewal told the block. Rules making clear these distinctions would provide real clarity to consumers, investors, and the industry. So Aaron Kaplan, founder and co-CEO of Prometheum, that's a cool word, a fintech company, called the news on Thursday a bad sign for staking as a service, as it's currently offered in the United States. So that's the key, as it's currently offered, meaning people are making this middleware and they're applying their own rules to it, and they can do what they want willy-nilly and just call it staking, right? But the facts might be they're not even staking your funds. They're just using liquidity pools, and who knows what they're doing under the hood. They're not showing their work. So it appears that staking as a service is a regulatory financial activity, and that the intermediaries providing such services have to register under the federal security laws. Kristen Smith, CEO of Blockchain Association, an industry advocacy group, also weighed in criticizing the agency over its regulating by enforcement. And yeah, that is so astute. So she weighed in criticizing the SEC over regulatory or regulating by enforcement. That's exactly what they're doing.
No
they're,
rules.
They're regulating whenever they want to spank your pee-pee, but they're not going to give you the rules to make sure you don't get spanked. That's not good.
No.
Why would you do that?
I know.
Clearly, it's because you're trying to assert dominance and scare people away from the space. But as we know, if you are in the right and you are documenting your work as you go along, there will be a day in court and you will be justified. That's how this stuff works in the end, right? So that's why we have to keep really, really tight records of what we're doing, so that even if they try to run us through hell and back, and there's this saying in the court system that the process is the punishment, right? Like, even if you are found to be innocent, the very fact that they dragged you through court and all those court costs and all the opportunity costs of having to go through court, like, at very least, that's what they're trying to threaten you with.
But it's
hassling
terrible.
you.
It's terrible because I feel it's anti-American, to be honest with you.
No, it's not constitutional. It is not constitutional, but there are people who are in sworn positions of authority who do not care about the oath they took. It was a formality to get where they wanted to be. They don't actually take the oath serious, right?
Precisely.
They see it's Animal Farm. They see everyone's equal, but some are more equal.
Yep. Especially if you're my buddy or we're related somehow. And that's
and truly, if we're adopting like cryptocurrency in a properly I can't talk. What is this? Properly decentralized way, there is no middleman. We are holding our private keys. Everyone's playing by the same rules. We're not a distributed system. We are a decentralized system. And I PP jokes. I love it. Hilarious. So I think this is worth repeating over and over again, because I want everyone to truly understand this concept. I've seen this be the root cause of a ton of people's confusion and why they're getting played and getting pissed at the space. There is a distinction to be made that if you have a bunch of computers in different places, that is a distributed system. It's distributed, meaning we didn't say who owns those machines. We said they're just all over the place. So yeah, it's true. If one goes down, the other ones are still up and running. So you have fault tolerance, redundancy, high availability, those types of things to make sure the service doesn't go down. But what you don't have a guarantee over is who owns those machines. If the same person owns like 90% of the machines, it is not decentralized, it is distributed. That's the distinction between decentralized and distributed. Something has to be distributed first in order to be decentralized, but just because it's distributed does not mean it's decentralized. And there's different ways something can be truly distributed but not decentralized. Even if like the protocol itself is decentralized, if the same people have like passwords into these servers, or the same people have the ability to threaten people who are controlling those servers to make them do what they want to do, like, that's still questionably an attack against the decentralized quality of the network, right? So I want us to think in those terms, right?
Yes. And to highlight precisely what you said, Brandon, is the ownership of the network are in terms of the participants in it. That's the key between distributed and decentralized. If one person or small group of people can change the entire database, that is centralized but distributed. If an entire community, which is Bitcoin, for example, is a perfect example of that. They're all over the planet. I mean, in communist, it doesn't matter religion, it doesn't matter. You have miners all over the planet. So
Yep.
that is a decentralized, because to cheat or change a record, you need 51%. It's impossible to get that at this moment in the reality of the Bitcoin decentralization. So the records are true. Every transaction is true and unalterable, which makes it a trustworthy network, a decentralized network itself. That's the difference between decentralized and centralized.
Yeah, and if your operational security is crap and your keys get compromised, and you get pwned that way, like that's not Bitcoin's fault. That's you didn't, lock your house right. you know,
Right.
that's yeah, you tattooed your private keys on your forearm, you idiot. Like gang gang. I put it on the, I put 12 c words on the inside of my lip. It's like, stop doing that.
While you're unconscious from the last load bomb you smoked, so you just ripped your
Yeah.
lip and took it.
Anyways, that's funny. But back to the news. So, yeah, so staking is an important part of the crypto ecosystem, allowing individuals to participate in decentralized networks and giving investors more options to earn passive income. That's all good stuff. Smith said the settlement was another example highlighting the need for Congress to introduce legislation. Duh. Like this is like I dong dong dong, like we're just a resounding gong saying the same thing repeatedly, because it's like we need clarity. Give us clarity so we can build stuff and stop getting punished for trying to innovate. You can't keep doing this to people.
It's killing the
So
industry. Innovators are going to have to leave the United States. Like every other new technology, we've exported it because it was more convenient financially, but now we're going to bleed out intellectual property and innovators because
yeah,
we're putting them through the purgatory.
yeah, and that's what it feels like. But Indo likes jokes. What's up, Indo? So staking, but not proof of stake. So though Gensler has raised questions about proof of stake, or whether proof of stake might look like a common enterprise, which would require registration of tokens as securities, experts saw the consensus method that Ethereum and other projects rely on as safe, at least for now. Dun dun dun. Validators are not financial intermediaries. That's true. They provide technology services, not financial services. Thank you.
Mhm.
Said Allison. I don't mean to say your name wrong because you're saying lovely words.
Mangiero.
Mangiero, um, executive director of industry group Proof of Stake Alliance. But opinions differ as to whether it might more broadly put exchange staking programs into question. I think it will. Yes, because they're making middleware. They should get hit for that, but they should be given the clarity to know why it's not good, right? Like this whole like centralized thing, it just needs clarity. So the SEC's actions, I'm sorry, one action. The SEC's action is not a commendation of staking writ large. I don't know what that means. Said,
Overall,
that's stupid. I
yeah.
know, but I don't like that language. Said Zachary Fallon, partner at the law firm. Oh, he's legal. Katzal, a former SEC attorney. That makes sense. The dude freaking talks to his wife that way. This is a regulatory condemnation of Kraken staking programs specifically. So Jennifer Schulp, director of financial regulation studies at the Cato Institute, if that's wrong, I apologize, saw the action as muddying the waters for companies offering their own staking programs. Piecemeal enforcement actions like the one brought by the SEC against Kraken are a poor substitute for providing guidance as to what characteristics of a program will trigger regulation by security laws, said Schulp, who is director of financial regulation studies at the Libertarian think tank. Shoutouts. Agnes Gamble West, a visiting senior research fellow at the Marcadis Center, was also less than impressed with the SEC. Ooh, spicy flame 'em. Get them, boss. The bigger loss is that the U.S.-based crypto business are being compelled to shutter or move offshore rather than operate compliantly within the US. And that's what Jaime is saying.
Yeah.
The bigger loss is the US-based crypto businesses are being compelled to shutter, basically close shop, or move offshore rather than operate compliantly within the US. All they're going to do is like this is literally a market. Like countries themselves and their policies are becoming a market. And like I don't have to physically move to another country to start a business there. All I have to do is pay for a business address there and maybe hire an employee who's physically there. And so that's what people are going to start doing.
Yes. Sadly. And so all the intellectual property the United States has developed in the last 40, 50 years, it was foreigners coming to a safe haven so they can innovate. Shoot, even the founder of Intel fled the Western Bloc, worked as a waiter, and built Intel because he brought that knowledge and built the team to build Intel, the microchip company. So it's
he brought chips to people's table before he brought chips to people's computers.
Oh my God, Brandon. Okay, awesome. So
he's the chip guy.
Okay, good. Fantastic. So please see the writing on the wall. And that's why it's so important. I mean, we're not against regulation at all, but we need regulation that is fair and innovates. It brings thinkers to the industry. Of course, you got to squash all the scammers. Fine. Let's do that in the process. And I think the market itself will crush them for you as it tanks down there. Now, it's one of the key things, and what I loved about this article is the fact that they're differentiating staking versus what Kraken was doing. Kraken needed liquidity, which is money, which is the value of the token to provide these trading services, leveraged and all that crap, versus staking as an engineering aspect of it is actually encourages the game theory, meaning we keep the network secure. And how do I keep it secure? By putting the value in tokens. So this server is certified. Yes, if they act incorrectly, they will lose their store value. So it becomes a utility for the network to process transactions and secure the network. It's two layers that it's fulfilling. And of course, the result should be the token itself as a reward for providing that service. Is very different. One's a utility. The other one is for your money, to produce money. So
it has utility, though. That's the key. You have to put your peanuts on the table, and if you act wrong, they crush your peanuts. But if you act right, they give you an extra peanut. You understand?
Well,
do you understand, boy?
Put your peanuts on the table. It's taken.
Hold on, Brandon.
Your peanuts cracked.
Right. My tenders. Yeah. Nice. Good.
But so that's so astute, though, Jaime. Like people are missing like this concept because they're looking at the end user experience. End user experience is that I put my money on this software program, I lock it in, I can't spend it, but I get paid when I'm doing that. And so the end user experience is not able to easily distinguish like why these different things actually have distinction from one another, but they truly are different systems under the hood. And especially when you get into like the regulation of it, like how is the system functioning? Is there a party that is actually in custody of the person's funds to begin with? And are they acting as a custody broker? Those are different things, right? We got peanut jokes from Codebug. I don't want a third peanut. Sounds like it'd be uncomfortable. I don't want my peanuts crushed. Well, you know, it happens if it happens, brother.
Go.
That's why I let Brandon do the security aspect so my peanuts stay whole.
Yeah. Don't let the squirrels come in. Yeah. Oh no. But anyways, so the bigger loss is that US-based crypto businesses are being compelled to shutter or move offshore rather than operate compliantly within the US or find market-based solutions that mitigate potential harms to investors, which is a huge loss for US-based innovation and competition, she said. Yeah, man, I'm putting This girl's on my dodgeball team. Agnes, you're on my dodgeball team. We're going against the SEC team. We're gonna wreck them, crush their peanuts. So the bigger loss is that the U.S. based crypto businesses are being compelled to shutter. Right. So also noting 30 million fine is a drop in the bucket for Kraken. So like this is like, yeah, we might have crushed one of your peanuts, but you got a whole box of peanuts, right?
That's right.
Yeah, that's what happened.
It's a ceremonial payment.
It's a ceremonial peanut. So effects on the market. So despite Grewal's claim that Coinbase's program would be unaffected, shares fell over 14% to below $60 at market close on Thursday. Coinbase reported nearly 63 million in blockchain rewards revenue in the third quarter of 2022. Investors now have to start pricing in the possibility that this future revenue vertical gets removed if regulation comes down strict enough to shut down the product. Ouch. Said John Todaro, you have a cool name, analyst at Needham Co. While staking revenue is still a relatively small contributor today, there is a high growth potential in this vertical. Todaro wrote in a note today. So that's kind of helpful. Like you see how much juice was actually in that story. Like there's so many things that apply to us and how we're thinking and how we're approaching these things and why this is important to be done correctly. Oh no, Anne's talking about my peanuts again. My boys, peanuts. Oh my goodness. Yeah, we got to feed the bull some peanuts. That's right. The bull's eating peanuts. I love that. Yeah. What's up? Stopping by to say, what's up to all? Looks like I walked in on some crushed peanuts. You did. Crushing them nuts. Actually, peanuts aren't even a nut. They're like legume. They're called ground pea. They're a pea or a bean.
Because they were nice and hard in the middle. I guess they're nuts.
Yeah, little legume. Do not assume the legume. We'll catch the stream later. What's up? Well, enjoy the work day. Feed the bull. Shout outs, homie. So our next story is kind of similar to this. We're just going to touch on it very quickly, not stick here the whole time. But wrong button. There we go. So Coinbase CEO Brian Armstrong says he'll happily defend crypto staking services against the claim it's a security product. And so, yeah, we'll just do the TLDR on this one. So Coinbase's staking services are not securities. He will happily defend this in court if needed. And yeah, we saw Paul Grewal's like not playing games. Grewal said the staking is not a security under U.S. Securities Act, nor Howey test, the later of which U.S. Securities and Exchange Commission uses to determine whether an investment contract is a security. So real quick, for people who don't know, Jaime, can you go over the Howey test and explain like why that keeps coming up?
Yeah, so the Howey test is a test, and I'll keep it in simplest terms possible. If you, as a company, want to raise capital, raise money for your business, and it is used for future, so you're selling shares of your company. Let's say you want to sell $1,000. You need $10,000 to launch your business. Well, you go out and sell. You break it down into 1,000 shares, for example, or 10,000 shares, $1 per share. And you go to other people, hey, give me $1 and I'll give you one of my shares in my company so I can build it out. And you will get money down the road in value where you can sell your shares to other people. So I'm actually approaching someone to get their money so I can build this company. And that's the Howey test. So why are you raising this versus why would staking or tokens that are used as part of the network not necessarily be a Howey test? Is because they're not going after US dollars necessarily. They're using their own token to process and secure the network. So process transactions and secure the network. And of course they get that same token. They're not getting US dollars back. They're getting the actual token. So it's on the network in the builder to do that. So that's the difference. Is I'm actually grabbing US dollars so I can build a company to pay back and earn money, versus the other one is to have a function within a network, but I'm not asking for US dollars.
Right.
I'm
Yeah.
actually
So
staking. It's up to the person who comes to the network if they want to participate in that network, but it is
yeah,
not necessarily. So that's where the difference is going to be with ICOs, when initial coin offerings back in the day where they were
it's
asking for
fundraising.
dollars.
Yep.
Yes. So that could change things. And just like Tamp just said, yep, determines whether a transaction qualifies as an investment contract. So that's one of the primary differences. And like stated before, I promise to give you more dollars if you invest in my company, versus a staking itself or part of the network. You're just getting that same token to secure that network. So it
Mhm.
depends on people believing that this
Yep.
network is a valid network to be able to put their own value into it.
When you're participating in consensus mechanisms, that's what staking is.
Mhm,
You're being paid for you providing a service, right?
mhm,
You are providing a service because you're putting your peanuts on the table, right? Um, not necessarily your peanuts from getting slashed as a delegated staker or non-custodial staker, but um, you are losing the you're at risk of not getting paid the amount during that time when you could have been staking with some other validator that has a good track record of paying you on time, if that makes sense. So
mhm.
yeah, interesting little situation here. And Anne, shout outs to Tamp, um, which is saying stable coins pegged to the US dollar should not be damn securities. Yeah, we agree, we agree. Also, we need more peanuts in crypto. Where's my peanut coin? Um, so according to Greewall, Coinbase's crypto staking services do not meet any standards of the Howey test, investments of money, common enterprise, reasonable expectation of profits, and efforts of others. As staking services are decentralized, if it truly, if it really is like you sticking to what the blockchain itself set forth, it's not it really doesn't fall into a financial service by the exchange or whoever's providing the nodes. You are providing a service and you are getting paid for your service actually, um, and you're giving them a cut for hosting infrastructure because you don't want to have to deal with all that server nerd crap. But
Yep.
you're just like, if I point my money there, cool. And so staking services are decentralized and non-entrepreneurial. The users always maintain ownership of their assets, which does not make them an investment. So that's the caveat, though. Do you hold your keys? If you hold your keys and it's never, delegated to me to hold your keys as like the exchange, then yeah, I mean, it's your money the whole time. I never took ownership over. But if I do, then I'm now acting as a party controlling your funds. So like that's why people pay highly regulated organizations like Edward Jones and Charles Schwab, for example, to manage their money, because they really are managing. They're choosing when to buy and sell and how to hold it and how to keep proper ledger of every single action taken on it. And like that's a regulatory requirement, right? There's a bunch of certifications you have to have for that. And so we can't act that way with people's cryptocurrencies, but and act like it's not a security. But if we are actually letting them hold their funds, we don't fit that pattern whatsoever. And that's what he's saying here. Imposing security laws on crypto staking will prevent U.S. U.S. consumers from accessing crypto services and push them to unregulated. So that's how black markets get formed, offshore platforms, right?
Mhm.
Like so if people can't do things in the light, but they still think it's reasonable, they should be able to do them. They'll do them in the dark. That's just how this stuff tends to work, right? So it's like this is even true of like energy. So it's like, hey, we really don't like people using coal and natural gas. It's like, okay, fine, let's shut it down in the US, or people actually follow some rules here or there and actually do it more cleanly. And instead, let's just throw that over to Russia and China, because we know that they have high standards for environmental cleanliness and operations. No, like you're literally creating more emissions and more greenhouse gases and more whatever you're concerned about by not letting the US do it correctly. Just let the U.S. do it correctly and get out of our freaking way. And then we're going to put pressure on people who aren't doing it correctly. And by the way, I don't know if this is a tangent, but I'm gonna say this. Did you know the majority of the recycling programs we've had over the last like 15, 20 years were being wholesale sold to China, and China was dumping it in the ocean? We were selling plastics and different materials to China to recycle because they had facilities for it, and they were dumping it in the ocean this entire time. It eventually got found because it was seen on satellites. So that's that's fun. Gundy, I want to know what project is going to move up and give us old school ETH gains when mining at home. It's not going to happen for a while, my guy. I don't think that's going to happen. I think there's too much hash rate out there right now, and it's being divided amongst too many people, and there's not enough demand. So yeah, it's going to be a little bit. There has to be more money in the market for proof of work, lesser proof of work coins to be seen as actually serving a function, I think. But I'll finish this up. I have ADHD and I'm really trying to focus. Last week, the SEC fined the US-based crypto exchange Kraken $30 million. We saw that, which is a little. They crushed one peanut out of a box of peanuts. The SEC is reportedly planning to sue Binance stablecoin owner issuer Paxos Trust Company in its regard the stablecoin as an unregistered security. So that's the segue into what we're talking about. So Binance, and this is the last thing we're going on. I know we're going over time, but it needs to be said. You're going to hang out if you want to hang out. So Binance here, there was some pretty fascinating stuff. Breaking Paxos. So Paxos is a company that is been partnered with Binance. So this is breaking news. Paxos terminates partnership. They're out of New York, yeah. They terminated partnership with Binance, and they stopped minting Binance USD. And so this is why Binance's price kind of took a kick in the peanuts. So in brief, Paxos announcement, end of relationship with Binance for BUSD stablecoin brand. BUSD will continue to fully support or to be fully supported by Paxos and backed 1-to-1 with US dollar reserves. So they're just stopping further work. They're just putting a pin in it, right? They're going to continue what they already committed to, though. Customers can redeem funds in US dollars or convert BUSD to Pax dollar USDP. I hate that, so I'm not going to do that. USDP doesn't feel good. I don't want P at the end of that.
That's your PP.
Yeah. I might crash my peanuts. Yeah. Paxos, the premier regulated blockchain and tokenization infrastructure provider has announced that it will end its relationship with Binance for BUSD stablecoin brand. The decision, which comes in close coordination with New York Department of Financial Services, will take effect on February 21st. 2023. So Paxos ends relationship with Binance. Paxos maintains that customer safety has always been its top priority and will not change in the wake of recent announcements, the firm said. BUSD stablecoin will continue to be fully supported by Paxos, with all BUSD tokens issued backed 1-to-1 with US dollar reserves held in segregated accounts. Paxos Trust, a regulated entity overseen by the NYDFS and audited by a top 4 accounting firm, will continue to manage the BUSD dollar reserves. For customers looking for alternative options, the stablecoin issuer will redeem funds in US dollars or convert BUSD tokens to Pax dollars, another regulated USD-backed stablecoin. This move will not impact Paxos' ability to serve its customers, continue growing its staff, or fund its business objectives. In fact, the company said it remains dedicated to becoming the global leader in blockchain tokenization infrastructure. It aims to provide or to continue providing fast, safe, fair, and more efficient financial systems to global enterprises. That's cool. Regulatory pressure on the rise. I think that's the reason they tapped out. There's just regulatory stuff, and they're like, I don't want to get mixed up in this. Right. Paxos has reportedly received a letter from the SEC indicating that the agency intends to sue the company for violating investor protection laws. This move is part of the SEC's growing campaign in crypto enforcement as the agency intensifies its focus on major players in the crypto market. The SEC issued a Wells notice to Paxos, which is used to inform a company of an individual or of a possible enforcement action. According to sources familiar with the matter, the notice alleges that Binance USD, a digital asset with Paxos, issues and lists in a unregistered security. Binance and Paxos announced the partnership to launch BUSD in 2019. The digital asset exchange run by Paxos, itBit, also lists USD alongside many other crypto exchanges. So, Miles, I'm sorry for your last name, but it's Deutscher, not Duscher. Don't call him that. He's nice. The SEC has labeled BUSD as an unregistered security and is suing its issuers, Paxos. But how on earth is a stablecoin considered a security when it clearly doesn't meet the Howey test? No one has ever had, I clicked it. Why did I do that? I keep doing that on stream. No one has ever had the expectation of profit when buying USD. That's exactly true. In doing so, the Supreme Court established 4 criteria to determine whether an investment contract exists. An investment contract, this is the Howey test, an investment of money in a common enterprise with an expectation of profit to be derived from the efforts of others. So it doesn't fit that. The specific details of the SEC notice are unclear, as it couldn't be determined if it is related to Paxos issuing of the coin, the listing of the coin, or both. When asked for comment, a Paxos company spokesperson stated Paxos is not commenting on any individual matter. Binance has noted that BUSD is issued and owned by Paxos and that Binance only licenses its brand. In a statement, Binance said, "We will continue to monitor the situation." That's fair. The firms that receive Wells' notice can respond in writing and explain to the SEC why it should not proceed with a lawsuit. The SEC's 5 commissioners must vote to authorize any enforcement settlement or litigation, and Wells' notice is not a final indication that the SEC will take enforcement. So they're calling a bluff, is what's happening here. They're saying, yeah, I don't buy it. Stablecoin BUSD depegs. So the Binance branded stablecoin BUSD faced a turbulent shift in value as regulators took action against its issuers, Paxos. On Monday, BUSD, which aims to keep a 1-to-1 value with the US dollar, experienced a dip of $1 compared to rival stablecoin. Oh, I see, fractions of a dollar. It had a little peanut that got crushed, just a little peanut. This deviation from its intended value came following the New York Department's Financial Services order for Paxos, which both issues and lists BUSD to halt any additional minting of its tokens. So that's a big deal. That's a big deal because a few things. One, stable coins are not money, so be careful if you're holding a large amount in stable coins. It's something you just have to figure out, and you're not holding custody of that either. So keep in mind you're trusting large amounts of your money there.
It's like casino tokens. You can go to a casino, you get your US dollar pegged token, and you gamble, and then they'll convert it back to dollars. So consider BUSD and these others as tokens.
Yeah, and I don't want you to get pegged either or have your peanuts crushed. So it's important that you hold your own private keys. And I'm going to keep saying that till I'm blue in the face because I care about you. I care about you. And the other thing is that there are some companies that are standing up to the SEC and saying, look, you can't bully us around. You don't get to do this. Like, we know we're threatening your empire because you can, see an end to you being able to endlessly print money to solve your problems and just keep kicking the can down the street without having any accountability. But there's people building things that are just a better system, and there is accountability there. So I think that's why we're seeing SEC get so nasty with crypto, is because we're threatening a system that they've built and kind of relied on for a long time. So, but thank you for joining us here at Crypto and Coffee, where we talk about coffee and drink about crypto. It's a joke. Calm down. I hope you have a lovely Monday. Make sure you hold your own keys. If you need a ledger, link in the description. We'll be back on Wednesday, same time, to do this all over again. Until then, keep calm and huddle on. Later, love you. Bye. Join the Discord and talk to us if you have questions. We'll be there. So
yeah, you know where to find us. Like and subscribe.
Yeah. Don't get your peanuts crushed, man.
Don't get your pee-pee spanked either. Gundy.
Don't get your pee-pee spanked. Gundy shot us. Yeah. Keep calm and hodl. Hodl.